How do you do, ladies and gentlemen? I'm your host, Seth Julian. Welcome you to tonight's presentation titled Oil and Gas Geoeconomics. Excuse me. Please indicate on the question and answer area if you can hear my voice and see the opening slide, and then we'll start straight away. Hello, Belima. Great. Good to see you and welcome. Harry, Ugareth, Oki. Oh, Oki, good to see you again. Great. All good. Everybody's in. That's good enough for me. Great. Here we go. Now, ladies and gentlemen, I have to, well, first let me say I'm your host, Seth Julian. I'm the Chief Global Strategist here at Alvexo Trading, and I have a small apology to, or your forgiveness to ask. I have been very busy. We're planning for we're going to the London Investors Show on Saturday, and we're doing a lot of preparatory work, and therefore this presentation is not the one I wanted. It deals primarily with oil. I'll be able to adjust it as we go, but suffice it to say that the presentation itself is not exactly what I wanted to do, and therefore, can you raise the volume, please? I doubt that. How about now? It was apparently the thing went into mute. How is it now, everybody? Okay. Yes, we're supposed to hear the presenter, and oh, sorry. Oh, sorry. So you missed everything up till now. All right, no problem. Back normal. All right, I don't know where I left off, so I'll just repeat a little bit. And let me just remind you that the only protocol we have in the room is to please ask questions as they come up, so we can have as close to a dialogue as possible, and it's much more interesting for all of us. My name is Seth Julian. I'm the Chief Global Strategist here at Alvexo, and I've been trading in the capital markets for 51 years now. I'm 64 years old. I have advanced training in political economy, international trade, and business management. I started my career on Wall Street many, many years ago at an outfit called Bankers Trust Company, and have worked at a number of major brokerage houses around the world. And I've been at Alvexo Trading now for a number of years, many years. I think that's all we really need to say. Let's talk about oil geoeconomics, and we'll talk about gas as well. Please, again, I ask you to post your questions in real time so we can see them and we can all be involved in a dialogue, as much of a dialogue as possible. Now then, this map pretty much tells us everything we need to know about the world of oil and less so about gas. I'll come to gas in a moment, but still, notice that we focus on the Middle East, and this map is not coincidental. This is a difficult map to find because it involves the Middle East. It's got China, Russia, all of the Caspian Basin, the Black Sea, and not to mention, this is where there's a lot of misery happening now in the Ukraine. And you'll notice these lines. These are pipelines. These are supply routes of oil and gas. And so they flow through a very, very sensitive area. And that's what we mean by geoeconomics. Economics that is related to geography. And when we talk about hydrocarbons, it's a geoeconomic story by far. And so let's proceed. Now, I do want to emphasize this presentation was original. I don't know if I said this before when I was muted out. Um, I wanted to. I apologize to you, and let me apologize again if you didn't hear. We've been busy preparing for the London Investors Show in this weekend, and therefore I have not gotten to really updating this the way I wanted to, and I apologize for that. We will speak obviously about gas and the political geopolitics of gas right now, the geoeconomics of gas, but there's some parts of this thing that I'm going to skip over or go rather quickly because it really does focus on oil. The oil is sourced from some of the most politically risky places in the world, right? Iran, Saudi Arabia, Iraq. These places are fragile, like houses of cards. There's a threat. We don't see this in the press, of course, but there's a threat against the Saudi Arabians probably 3 times a month. There's a lot of rivalry here because the Saudis are protectors of the holy sites of Mecca and Medina. Their rivals, the Persians, who are not Arabs, by the way, but certainly our fellow Muslims, but Shiite, not Sunni. There's a great rivalry there. There's a lot of, this is a nasty neighborhood, by the way. I have to tell you this. Hezbollah is in Turkey, and Hamas is right here a little bit on the Israeli border. Jordan is as rickety as it comes. Syria, of course, is falling apart. Iraq is whatever Iraq is. God only knows what. Egypt is facing huge problems now because of the price of bread and grain coming out of Ukraine and Russia, or no longer coming out of Ukraine and Russia, I should say. So they're going to be further unstable. By the way, one of the things we don't see, this map is a bit dated. There's a huge, what have I done here? God only knows. My mistake, forgive me, ladies and gentlemen. There's a huge gas industry here right off the Lebanese, Israeli, and Egyptian coast that goes through Cyprus, or will go through Cyprus, and then through to Greece in an underwater gas pipeline. So we keep losing the sound, says Martina. How about now? We back in. My system indicates that I am no longer. I'm not muted. So everybody hearing? I'm really sorry. I hope we can do something about this. How's the sound, ladies and gentlemen? Need some feedback. Tell me if it's good, not good. I can hear fine. Okay, good. Okay, sounds like the problem's with you, Martino. I'm sorry. All right, great. Everybody can hear it. Back to business. So, because of the coincidence of the source of all of these hydrocarbons being located in a place of great political instability, we have a very risky supply situation. So oil supply is controlled by an international cartel, and by the way, cartels are illegal in most states in the world, but they operate freely in the global supply chain. And this itself is riven. The OPEC is riven with cutthroat political and economic tensions. If you think it's easy being the riding herd on the oil producers of the world, you're wrong. Very, very difficult, and we'll get into why that is in a moment. But the overall demand for crude worldwide is in a steep decline. And that is part of the problem. The aggregate demand for oil is declining as we move into non-burning society. We live in a society that exists by burning things. It's gas or oil or coal, our energy sources, our coolant, our electricity. Our entire civilization is based on burning stuff. And we're moving away from that because we're quickly choking ourselves to death. And hi, Bando. And so that means that the aggregate demand worldwide for oil is falling. And this gives the intra-cartel shoving a musical chairs-like edge. As demand is reducing, the music is getting faster, and they're removing the chairs, and people have less market to sell into. So this creates huge problems to manage this cartel. So let us continue. Here we go. Crude oil prices have fallen to levels prevailing. Now this is a bit dated, a little bit dated. It's obviously 53.90 now. It's well over. it's up in the $100 area, so it's come back. And again, I apologize for not updating this, but as I say, I just have been too busy, and I apologize. As you know, oil is in the 105 area now, but for a long time it had been very low, and this has caused tremendous problems for the cartel. We are of the opinion that they will fall to levels not seen since 2008, and very possibly during the 1980s, during the Iran-Iraq War. This isn't true at the moment because things have changed, and oil is not likely to go below 100. But it's not likely to go to 300 either. I've heard reports it's going to 150, 200. I don't think that's true, and very few people I know do, although there are some voices that say it does. Now I'm going to go over this quickly. I'm not going to read everything. It's not as relevant as it would have been if we're just talking about oil. OPEC has an interesting history. The Organization of Petroleum Exporting Countries was founded in the early 50s by the Shah of Iran, who was fed up with the abuse that was heaped upon the oil producers. They were literally taken advantage of by the Seven Sisters. The Seven Sisters were the major oil companies of the world, particularly the U.S., but also British Petroleum, Royal Dutch Shell, which is also half Dutch, half British. Standard Oil, which later became Exxon, Chevron, the giants, ENI, Total. You know those. You know the act. They were paying the producing countries peanuts and keeping most of the profits for themselves. Well, the Shah of Iran got fed up with this and decided that enough was enough and formed OPEC. And they, over a very short period of time, nationalized most of the oil, meaning that they made the oil their own property. Formerly, they were just leasing. The oil companies leased those grounds and gave a royalty to the nations from upon whom or under which the oil was located. That changed. At that point, they nationalized it. They took the profits and they told the oil companies what they were going to get. Now, the 1970s, since the and oh yes, with respect to OPEC and their muscular power in the oil markets, they had tried many times to impose an embargo, but failed. They couldn't really do it. They tried in 56, they tried in 67, in 73 they succeeded. So much so that they brought the Western world to its knees. It caused a huge recession, depending on how you measure it, that really didn't end till the early 80s. I mean, there were other factors involved there, but the inflation and the recession that was caused by the oil crisis of the 1970s, where oil had been $2.35 a barrel for decades, had suddenly shot up to, $20, $8, $10, $20, $25 a barrel. Gas prices at the pumps all over the world were at unheard of levels, literally unprecedented levels, and it brought the world economy to its knees. Now, one of the problems with a cartel is cheating. In fact, that's not one. It is the singular most difficult problem to face. The idea of a cartel works only if by restricting collectively the supply and prices will rise, assuming demand stays stable, which at the time demand was enormous. Cars were grossly inefficient. The amount of oil it took to produce one unit of GDP in most countries was about 10 times higher than it is today. We'll get to a chart that shows that in a few moments. And so the role that crude oil played in industrial society was much greater than it is today. And the problem was, as it always is in a cartel, is cheating. If everybody is allocated a production quota and prices are high, it's natural that they're going to sell more than their allocated quota to make more money. What eventually happens is that as supply grows, price falls. And it causes instability in the cartel, not to mention oil markets writ large. So that's always been a problem for OPEC. In the 1990s, we have a body called OPEC Plus. The plus stands for Russia. And Russia, which is was a huge oil producer, but was not part of OPEC, is now titularly part of OPEC, though not officially, and that's the plus. So it's OPEC plus Russia, and together they account for something like over 60% of the world's oil production. So much the cheating. Well, this is an important chart I want you to understand. Um, Energy consumption. This, by the way, is oil and gas. Energy consumption per dollar of GDP. So 1950, it's 1. By 2020, it's less than 0.4. So in other words, it's 60% less oil per unit of GDP today than it was in 1950. That means, simply stated, that the world is 60% more efficient. Not only, it's way more than 60 because the GDP has gone up tremendously since 1950. The world is, let's call it 100% more efficient in the use of its energy resources than it was 70 years ago. And you know that, not intuitively, explicitly. Car engines, they're more efficient, they're higher compression, it burns cleaner, with diesel burns cleaner, with power plants are more efficient. All that efficiency adds up to this chart. This is good for us as consumers, but not good for us as what's going on? I'm sorry, but not good for us as not good for the producing nations. And that's why, by the way, oil and gas producing nations are trying to diversify and succeeding, I might add. The Abu Dhabi, the Emirates, are seeking to become financial centers or housing and commercial centers, or in the case of the Emirates, travel and leisure centers, anything but energy. Or even some of them are going into alternative. The Saudis are going to produce the largest hydrogen plant, green hydrogen, I might add, on Earth, and that'll be up and running probably in another 5 years. So they are working really hard, spending a lot of their hard-earned cash, transforming hard-earned cash from the energy sector and transforming it into either other sectors or the alternative energy sector. This is the other half of the oil supply story around the world. Also, again, oil and gas. This is the shale world. These are the major shale deposits in the U.S. And they are producing pedal to the metal. There's a lot of oil here, and they're getting out. It's a gross, disgusting process. They have to inject high pressure, high temperature water with detergents added into it to force the oil out of a rock formation called shale, which is sort of like the cells in a sponge. It's forced up to the surface, has to be separated and cleansed. There's often byproducts of methane. It's a disgusting, really awful, toxic process. But we need the oil, so that's where a lot of the oil and gas that the United States produces come from. The Saudis definitely are seeking to crush the shale oil industry. That's clear. This is still not. This is still out of date, even though it goes to about 2021. Because again, it's still short of where prices are. We'll go to the real charts in a moment. And these are the sources for today's programming. So let me just switch to some real-time information so that we can go on, try to bring this up to date a bit. Alrighty. I want you to look at this map. We're moving on to the gas supply situation in the world. Now, this complicated, rather confusing-looking map is incoming gas pipelines to Europe from Mother Russia. I want you to notice how many of them traverse Ukraine. Here's the outlines of Ukraine in brown. Here's the Crimea that's already captured. It doesn't show the. I have other maps. I happen to be a map fanatic, and many people in our business are, because it's really one of the most powerful graphics ever invented. And it shows that a lot of this gas that goes into Europe flows right through the Ukraine. Keep in mind that up until 1989, 1990, the Ukraine was part of the Soviet Union. It was dark green like Russia is. And so is everything you see up to about here where my mouse is moving. This was all, including here, the former Yugoslavia. This was all the USSR, the Soviet Union. So now that the West has provoked Russia by holding out the carrot to the Ukrainians of EU NATO membership, which in my opinion is exactly what has caused this Ukraine war. The first time we've had international warfare on the European landmass since before most of us were born. I believe personally, and I don't want to get too editorial here, but I believe that the West is responsible for this. It's not, Putin is not a madman. Putin did not. Yes, the Russian army is rotten, but they're effective. And he said, and there's a long history of this, and I'm just going to go over this briefly. It's my opinion that the Western world could have avoided this whole Ukraine problem if they paid attention in 2008 during the Bucharest conference, when Putin made it clear that Western membership by Ukraine into the NATO alliance was a red line. So he couldn't let that happen. It was viewed as a threat, and the rub, as Shakespeare would say, was that the United States then, even among all of the 21st century leaders in the West who felt that, well, the Ukraine wants to be part of Europe and they're a free nation now and they could, we'll help them, really with total disregard to the actual realpolitik on the ground, which is what people who are crafting foreign policy have to be painfully aware of. They were of the opinion they were 21st century and no, it's benign. They want to be in the West. They want to be democratic. So we'll just let that happen and support them and even encourage them, as they're doing now, holding out the idea that, well, if you want to break free, we'll help you. Well, not so true. We'll send Stinger and Javelin missiles, but we're not sending flesh and blood to die by your side. And they say, and that's because they say it explicitly up till today, that Ukraine is not a strategically important asset for the West. What they should have done is let Ukraine be a buffer state, keep out of it, let the Russians understand that it's not going to be the Eastern Front of the NATO alliance, and leave it at that. But no, they didn't do that, and I believe that that's why we're living in this hell right now in the Ukraine. But that's my opinion, and I could be wrong. Let's get back to the subject at hand. Gas supply, the geopolitics of gas supply, particularly. Why gas? Europe and Russia have a gas-based relationship. In fact, Russia only produces two things the world wants: weapons, which are second-rate, but discount priced to Western weaponry, and natural resources, be they field crops like corn or wheat, not corn so much, but wheat, oats. The Ukrainians are the world's largest exporter of canola oil, rapeseed oil. Russia also is the #1 world exporter of wheat, believe it or not. But that's it. And of course, hydrocarbons. Nobody has ever seen a Russian car, a Russian television set, a watch, a bag, an item of clothing, anything of any value to, and nobody ever brags about some Russian accoutrement or accessory they own that's Russian, because there aren't any. They just make weapons and natural resources. So they do it in big time. So you see these pipelines going into Europe, and Europe has become utterly dependent on this Russian gas, to the great dismay of the West, the United States in particular. And we'll talk about. You see the Nord Stream pipe here? It should be a plan. The blue. Oh, here, it's Nord Stream right there. It's further. It's almost to here now. It doesn't have a date on it. This is not so full. The Nord Stream thing is done. The one, and that's the latest pipeline. Notice that it goes under the Baltic Sea, and it goes into Germany. The idea, I'm getting ahead of myself. The Western, particularly the United States, has warned Europe that they need to get off of the Russian gas addiction, because they will be manipulated ultimately by Russia, and they were right. And they had argued strenuously but ineffectively to curtail the Nord Stream pipeline. And this is the rub that I want to bring before. The Nord Stream pipeline project is headed by Helmut Schmidt, the former German chancellor. And he, to this day, has refused to condone the attack in the Ukraine. He might agree with me, by the way. There are very few people that do agree with me on this subject, but some of them are pretty heavyweight. Stephen Cohen, Kissinger, Mearsheimer, a few heavyweights in the international affairs world. Though they're heavyweights, they're a tiny minority. Most of them hew to the Western line that it's bald-faced aggression in the Ukraine, and Russia is a monstrous country, and you know, without taking any consideration of the realpolitik involved and how the West is really culpable. Again, it's my opinion, but they're culpable in provoking the Putin into doing what he's doing. But this is the gas supply network. It's slowly going to shut down. My opinion is, and you don't hear this too much, one of the objectives here is not only to deny the Ukraine to the Western alliance, but to redirect the flow of Russian hydrocarbons from the West to China. There are a couple of major pipelines that go from the Siberian region into China. Not many, but there'll be more. And they're building some as we speak. But I believe that that's parcel of what's going on. One of the problems with this dependency on Russian gas is I want to point out these stations. These are liquid natural gas stations. Notice that there are no pipelines from these. All these stations are on the western coastline of Europe. There is one in Hamburg. They're building more. The Germans are building 2 more. But you'll notice that the pipeline system is not connected to the LNG terminals. And gas pipelines are much harder to build, by the way, than oil pipelines. Oil pipelines are fairly easy, as long as they're sealed well enough and they don't leak so easily because crude oil is very viscous. Gas, on the other hand, it has to be airtight, and leaks in the gas system can be highly dangerous. So there are no pipelines connecting these LNG terminals. So supply that does manage to get in here to supplement some of the Russian supply that's coming offline can't get to where it needs to go. So that's a huge problem as well. So the geopolitics of gas when it comes to Europe is unfortunately extremely complex and difficult. That's the essence of the problem when it comes to gas geopolitics. So we only see one. Well, it's 2 plants here. There are more. I know that there's 2 planned in Germany, but they just put them on the drawing board since I think the outbreak of the war, so they're not on the map yet. So let's talk practicalities now. As traders, that's the background. We know what we're looking at geopolitically. Let's take a look at prices. All right. That's really, at the end of the day, we're traders, and that's what we have to look at. So here we see, this is the MT4 platform, and these are the commodities we trade. This, of course, is natural gas. This, ladies and gentlemen, this is a daily chart. Daily chart. This is the kind of chart that brings tears to a trader's eye. Why? Because it's a beautiful trade. Now let me stop and digress by saying that those of you who may be thinking, well, isn't it horrible to be profiting from the misery taking place in the Ukraine? My pat answer to that is no. It's no less morally unacceptable to trade gas when the price goes up than it is to trade coffee when the price goes up because of meteorological realities. For example, those of you the clients in the house, I know there are many of you attending today who are just came by way of other sources, particularly investing. But those of you who have accounts with us know that we, for a long time, were pushing this. Coffee was a great trade, and that's because of complexities in the coffee plant as such. It's a very temperamental plant, and meteorological conditions in the Arabica growing regions of South America, particularly Brazil, but also Colombia and Peru. Yes, it was a difficult situation. There was drought, there was frost, there was a real problem, but it drove prices up. Our job as traders is to take money out of the market, be it as a result of Mother Nature or human aggression. Our job is to take money out. Here's an opportunity to do so. Now, you think gas is going to go higher? Well, let's just look at the technicals here. It's above the 20-day, the 50-day, the 200-day moving average. Volume is increasing way above the average. The force index is well into positive territory. From a technical point of view, ladies and gentlemen, this is a good trade. We think gas is going to go up. Yeah, you bet. And I'll tell you why. The Russians, again, getting back to the geopolitics of the gas here, the Russians have already cut off supplies to Bulgaria and Poland. Now, one could argue that that's just an opening gambit. No, not one could argue, I argue that it's an opening gambit. The real target, of course, is Germany. 60% of Germany's gas comes from Russia, 10% of Poland's, and probably about the same in Bulgaria. But Bulgaria and Poland are not major industrial powerhouses like Germany is. So the percentage is relative. 10% in a country whose industrial output is a fraction of Germany's is not the same as 60% of a country whose industrial output leads the world. Germany is one of the top exporters of industrial manufactured goods on earth. So it's, the Russian cutoff is a gambit in a much larger chess game. And this pertains not only to gas, but is to oil as well. Now, even though we just saw earlier that the demand for oil is slowing at all, this is crude oil. Brent. What did I say? It's 111 now. I'm sorry. It's an active day. It's 111. Demand on a hugely rising volume. By the way, when we see volume rising, we call that sentiment or momentum. It means that when price rises or falls on low volume, there's not a lot of sentiment behind it. It's not a lot of momentum behind it. When price rises or falls on high volume, there's a lot of sentiment. Now, in this case, where we see volume moving in a range on high volume, there's a lot of battles between the bulls and the bears. And again, we see that. There are days where it goes down and days where it goes up. There's a lot of battling going on here. But the long-term trend is up. And so the question is, it's not whether it will get to 100 and, what is that? 130, 130 right there. The question is, when will it get to 130? Because it will. Why? Despite the overall aggregate demand for oil declining around the world, in the short term, supply of oil is diminishing. This Russian oil cannot be purchased. Some of it is purchased on the black market. The Chinese buy a lot black market, like the Iranian oil has been forever under some sort of sanctioned regime. But they buy it. It's sold at a deep discount. Like the Russian oil will be sold to the Chinese at a deep discount. But it's not available to the major world consumers. Therefore, price will rise because supply is declining. It's that simple. Economics often is complicated and it's beyond the mere simplicities. But this is a case where the mere simplicities largely explain exactly what we see on the chart. So oil is rising. Gas is rising. And I think that pretty much is a great way to sum up today's presentation. And I can sum it up, and so we can open up the floor to questions, ladies and gentlemen. But let me just say in summary, what we have is a situation in the world where open warfare on the European landmass is, regardless of my 2 cents about why it happens or how it could have prevented, open warfare in the European landmass has curtailed the supply of major hydrocarbons, oil and gas. Because demand is not subsiding anytime soon, and supply is contracting, there's only one option left. Price rises, and price is rising. That's pretty much the whole story in a nutshell. We think it's going to continue. There are those who think, well, the war will be over soon. They'll sue for peace. It'll come to an end. No, not at all. It's not going well. And anybody who thinks that, yes, the Russian army is rotten and they're not good fighters and they're corrupt and they're ill-equipped and they're being mauled to death, I hasten to point out that Ukraine is being dismantled city by city. We don't really hear too much about Ukrainian casualties. We hear about the 6.5, 6.8 million refugees that have fled the country, another 15 million who are internally displaced. And I don't believe it's Putin's objective to occupy the country or to take over the country or to annex the country. His objective, and he's succeeding at it, is to make sure that the West does not move its eastern border of NATO into the Ukraine. I don't think that's going to happen. The West is rushing to protect Latvia, and the Finns and the Swedes are running to become NATO members. That's not what this is about. I don't think it's a good move. I don't think, by the way, that the Swedes or the Finns will be allowed into NATO, because NATO, the way NATO works, is it has to be unanimously accepted, and the Turks already are saying no, thank you. We don't want the Swedes in. We don't want the Finns in. And I don't think that that's a bad thing, because I don't think we need to provoke Putin any more than he's already provoked. He's not invading Finland. Didn't state he's going to invade Finland, but stated unequivocally more than 12 years ago, and repeatedly and clearly and articulately, that the West has no right, nor does he have any intention of allowing them to absorb the Ukraine, period. So I don't see that changing. I don't think this war is going to be ending anytime soon. All we have to do, in my opinion, to look for evidence of that position is to look at Grozny, Nagorno-Karabakh, places that the Russians, Chechnya, places that the Russians, yeah, they were also a sloppy, poorly rotten army then too. But those wars did not. Chechnya was virtually destroyed. They use that term. You'll hear that term, being bombed into the Stone Age. Well, they were. And so I think we'll rest my case there. Any questions, ladies and gentlemen? Let's open the floor to some questions. No, I've thoroughly depressed you all. Everybody is out cold, either crying or in a coma. Feel free. I'm sorry to be so depressive about this. I really am. But the geopolitics of oil and gas today is not a happy story. It's not like the OPEC story that I would have told a year ago, which is when that PPT was made. Now, Belima asks, or first Bogareth asks, is it too late to enter an oil trade? Absolutely not. It's never too late. Don't buy into that. The train has already left. It's too late business. There's always money to be made, especially where the trend is so prevalently and obviously clear. What could bring the price of gas down in the next week, Belima? Nothing. I mean, again, let's look at this volatility here. In the last, well, let's get a better chart. I like the MT4 because it gives me a collective view. But let's go to the excuse me, the trading view chart. If we go to natural gas, we get, by the way, this is trading view, the best available charting platform on the internet. This is a weekly chart. Let's drill down to a daily. Again, it's the same chart. A lot of volatility. If we take a look at, say, the last, say exactly, we go from 6th of May until today, the 18th of May, 17th. It's gone down a little over 8%. It's gone down 8% since then. But from here to here, just run the film back a little bit. From here to here, it fell 17%, and that's in 2 days. So can it go down? Yes, it can, believe it. But when you ask that question, it implies that you buy here and you sell here. Okay? Or you sell here, and I'm sorry, you sell here and you buy here. But leaving out that possibility was only a window of 2 days more open. The long-term trade is up. The long-term trend is up. So you want to buy in the long term here. Again, ladies and gentlemen, let me state clearly that there's risk here. Not everything we say and all the signals we send out, I lose plenty of money like everybody else in this business. You can't make money in this business without losing. And I dare say any competitive endeavor, be it sports, be it trading in the capital markets, you have to know how to lose in order to win. We all lose. Everybody loses. If you are playing with money, if you're trading with money that you cannot afford to lose, I suggest you leave immediately. You've got to be prepared to lose money here in order to make money, because lose you will. We all do. But the sine qua non of success in this business is making more than you lose. And so if you can do that, you're a success. But lose you will. And so understand that quite clearly. So in terms of Believing's question, what could bring the price of gas down? Mere volatility. Volatility accounts for this kind of movement. But still, look at the trend. The trends are, it dipped below the 20-day moving average. Okay, it popped right above the 20-day. So none of these are what you'd call strong exponential moving average indicators of a trend reversal or a correction. Mushabab asks, kindly, what is the strongest support level for natural gas to draw the stop loss below? And I have buy trades short at 8.9. Let's take a look. He's got buy, he's short at 8.9. Well, it's currently 8.3. So, so the support line. Well, you can tell from this, I would say this is a support line. 669, let's call it 699. That's clearly a support line. Below that, you'd say 64, 69. It's sort of a little bit. And again, I'm going, this indicator, by the way, is volume on price. This tells you how much trading is taking place volume-wise on the price level. This, of course, is volume on time. And that's a great indicator. And by the way, I do have a premium account with TradingView, and this is the reason I get this indicator. But it's not necessary. You can live without this indicator and see these support lines without it. This is just a little crutch. This is the point of control, meaning the most sales took place at this price in this data set, which goes back to October of 2021. Most of the sales took place at, a little under 4.9. And we can see that because price is way above the 200-day moving average. So that's the strongest support level. I hope I've answered your question, Mushaba. If not, re-ask it out, and I'll try to be more articulate, specific. Any other questions, ladies and gentlemen? If there are none, and I'll let you formulate your questions, just let me say a couple of things before we end up. First of all, for those of you who are members of the house, clients of the house, you know that this is the kind of quality work we put out for our people. We send signals, we have ebooks and video briefings. We have a wide selection of tools and aids that we provide our clients. And for those of you who are attending and are considering opening a trading account, an online trading account, please consider opening up with LBEC. So we do our best. We're stand-up brokers. We're upfront. We don't make money all the time. Let me make that clear. We lose like everybody else, but we do our best for our clients, and this is really, the essence of our ethos as brokers. So I want you to feel free to open up an account and see what we can do for you. I also want to ask you that there's a poll and a survey at the end of this session. Please fill it out. Let us know so we can improve. Let us know what you thought about today's presentation, etc. And finally, let me remind you that next Thursday we have a session, and I'll tell you the title of that in a minute. My diary does not make that clear, but I can tell you. Just 1 second. Let me look it up. It's Thursday the 26th. Yes, that's price action trading, and not as daunting as it sounds. That's our subject for the 26th. Price action trading, not as daunting. It's not all price action trading means is how do you trade based on the movement of price. That may seem intuitive. It may seem daunting. I want to dispel certainly the daunting part and show you how to trade according to the movement. Is it recorded and can we replay later? Asks Mushaba. Absolutely. You'll get the recorded session in about an hour or two. You'll get a link to it in your inbox. My pleasure, Mushaba. It really was. Thank you all for your interaction, your dialogue. It made it very interesting for me. Good luck in London. Thank you very much, Bogareth. I'll do my best. I'm going to give 2 presentations. We'll have a booth. Anybody who's in London on this Saturday, please feel free to drop in. I'm happy to meet you all, and it'll be worthwhile. It's a good show. It's a major show. Last time I looked, there was 7,000 people planning to attend. So it's a big show. There's a lot of exhibitors. It's a very, very interesting conference. So, ladies and gentlemen, with that, Cesar, thank you. Also, great, Mushaba. Thank you all very much. Those compliments mean a great deal to me. I really appreciate it. So, on behalf of the staff, the management here, ladies and gentlemen, at Albexa, ladies and gentlemen, we're proud and very humbled by your patronage of us as your online broker, and therefore, I am your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Bye-bye for now. My pleasure. Alone. Thank you for joining us.